Hey, welcome everybody. So let's talk about what can help you to make money in this market. This is the 60-minute SPY system generated off a program called the Algo 17 version 2, which is a product that we created to help us develop strategies for our own fund here at Person's Planet, J Person Asset Management. It evolved into a product that a few hedge funds used. It evolved into making it like better and better and better. It has various different functions such as scaling out and profit taking and trailing stop features. So what you see here is a couple functions, and just to let you know, how can this information help you trade? Very simply put, there's all ways of trading, and I know on the internet everyone's a guru, and gosh, you if you ever watch anything on YouTube channel, it seems that everyone's, all the internet marketeers are out there telling you how easy trading is, and you know what? Trading ain't easy, and I think most of you guys would know that. If it was, then everyone would be making money. I think the first thing you got to know is you got to be able to take signals when you get them. You got to be able to take profits when you see them, and you got to trail the balance and take something off the table. And that's exactly what this strategy's been doing in this wild west month of August, and now as we enter into September. Chart down below here is called Average True Range. It was created by Wells Wilder. I didn't alter this for in this version, which uses a 14 period, and that's what I just wanted to share with you. 14 period was Wells Wilder who created this concept and wrote about it in his book, Technical Something Trading Systems for possibly too many Grateful Dead concerts in my youth. I can't remember, but I think it was well, just Google his book, you'll find it. Anyway, he claimed that, again, Wells Wilder was a commodity trader, not a stock trader, and he was trying to account for ranges in gap moves that occurred in commodities for limit up and limit down moves. Back in the old days being the 70s, 80s, my era of fame was in 90s, and now still 2000, and now currently the 14 period was half a moon cycle, 28-day cycle. So he figured 2 weeks, 14 days. Now, what Wells didn't do back then was trade 24-hour trading sessions. So number one, we didn't have that. So I don't use a 14 period, but I use it for only examples here to share with you. Most trading platforms, I don't care if it's our good friends at Thinkorswim, whether it's the Trade Station, everyone defaults at 14 because that's the original settings. All right, so anyway, what does this mean? It shows that the market in the SPY, we've had extreme periods of increased volatility by ranges expanding. And what is a range when you have a gap with no daily range? Average true range simply defines from the close one day, all right, the close one day to the low or the high of the next day. So in this case, whatever is greater. In this case, we had a low here and we had a high there. And that is, the 1 day range there. This was the next day. So if this is the close here, and that's the low, they took the close to the high, whichever the greater of the number is. So what's greater? Close to the high, not low to the high. So in this case, this day's range would have been average true range was considered from the greater of the two values, low of high or close to high. So that's the difference in ATR. ATR is not a measurement or an indicator that tells us about which direction a market's going. It is a conditional situation. So more or less, when you have a flatlined average true range market environment of maybe 61 cents in the spider, you can adjust a trading strategy for taking profits in that normalized trading world, right? People that build trading systems, they don't know how to adjust for this. What we try to teach people is real simple. Use this to your advantage. When you start to see the expansion of volatility break out, you need to adjust your profit targets and you need to adjust something else. Instead of getting out of everything at hard stops, you got to get out of half and trail the stops. And that may work better for you. And that's number one lesson. All right, number two, let's talk about the current environment and the current trade strategy right now. We've been telling you about how the market is more bullish, and you've been looking at my videos maybe and seeing some of the tools that I've created. Number one, I didn't invent things, a lot of things. I invented Person's Pivots. I invented, which is a filtered pivot point trading strategy system. We created the high and low close doji signals, which is a trading system in itself. It gives you where to enter, where to place a stop, your holding period. It's very dynamic. More importantly, we also created this thing called the PPS indicator, which is found exclusively on a few platforms: Genesis, TradeStation, most importantly, Thinkorswim. And that paints the pictures of arrows, and that allows us to scan for actual buy and sell signals on the charts. More on that later. What we're looking at currently is a model that gave us an entry on a long system. Number one, this long signal took profits here, and it max barred out and got out there. And then again, the holding period on average is a small amount of time in this model, which will eventually need to adjust. In other words, in order to get maybe a 1% move, instead of taking a month, the month of August, it was generating 1% moves overnight. So your holding period was less. So a couple things that in a trade system you develop is: how long does it take for the price to get to X to Y? How much time does it take to make that profitable trade? And should you be getting out of everything or scaling out? So our models and our optimization function process has determined that at this point in time, it's best to still scale out. So that's what it did. It's in, as you can see, 343 contracts or share prices. This is a SPY. It got out of about 10%. So it gets out of something 10% just to allow a profit, and then it trails the balance. And right now we're still long. The red is the stop, initial trade stop. Blue was the intended profit target, but the market gapped above it and it gets out on the open. Now, this is an emergency hard stop. It's been overridden. Why has it been overridden? Because these white lines in the sand are our new trailing stop function. If this market settles and closes and gets below those white lines in the sand, it'll get out of the entire trade. End of story. Or it'll max bar out and say, gee, we've made our amount of money that it on average it generally makes, and it did so in a prescribed period of time, and it will get out on a max bar exit. So I just wanted to go through that for you first and foremost. All right, let's clean this up and get into what our live trading room is doing. And what models do we have? Already this morning we had a spectacular, this is Monday now, we had a spectacular short in the market. It came on a volume. This is a private volume indicator. So like I say, I didn't invent volume, but I did invent that indicator. What this indicator is a momentum indicator that detects the change of volume over time in not terms of volume numbers, but percent changes. And it does a lot better of a job and helps to account for filtering out changes in volume structure. So most people think that's why it says VM indicator. It doesn't say MACD. It says VM indicator. So it has two functions behind this. It has a momentum histogram and it has moving average values. So when the moving average and the momentum indicators are going negative and you get a sell signal, you could say, I like that trade. It improves the odds that volume structure is weakening. Let's go with the short. Now this has a couple functions and it says exactly what's on the screen. It doesn't get out, and I've done this with the live trading room, and let's go to format strategies right now, and you can see what, again, make sure that I'm telling you what I'm doing. It is version 17 Extreme V2. All right, so that's the product that we have running. It only trades from 8:40 in the morning to 3:25 in the afternoon. It won't take any new trades before or after that time zone. And this product allows us to maybe use several different time zones. If I wanted to trade European session, start time 1, end time 1. If I want to trade US, start time 1, end time. If I wanted to trade the first 2 hours of the day and the last 2 hours of the day, I could program it to do so. Or I could let it run 24 hours. What we do is we only run this model in the live trading room when people are in the live trading room. Why would you want to come join a guy in a live trading room that made money at 3 in the morning when you were sleeping and boast, hey, look how great we are? It doesn't work. If you're joining a live trading room and your time you come in, you want to see trades generated that can offer profitability with decent risk outlay. And that's what this system does. What's the decent outlay? Well, first off, let's get into, and I'm going to scroll down here and I'm going to go to exit strategy. So this runs when it's in a trade. It has 3 different stop functions: LCC, dynamic exit, and then compression exit. Those are your 3 choices. LCC works phenomenal with longer term swing trade and maybe 15 higher time frame charts. The dynamic exit, it's a function of ATR and LCC. It's a hybrid concept. And then compression adds both the dynamic, which is based on LCC, ATR, and time. And it won't kick in until we hit, maybe in this case, it optimized as ATRs to start. Compression exit doesn't even kick in until 3 ATRs. Now, that's not 3 ATRs of a daily. It's ATRs of 5-minute bars. So if it's a 5-minute system, it's a 5-minute method. So I just wanted to explain to you in full disclosure what we've done and how smart and sophisticated this is. And it's easy. So, I mean, what do you want? Something smart? Yes. Something to beat the other computers? Absolutely. Here's a trade the other day on Friday, just to let you see. These white lines are the compression exits. It got in a very choppy, sloppy market action. We had a nice profitable trade. It gave a lot of other profits back. It got long, didn't give anything, and lost a couple ticks. So no harm, no foul. We walk in first thing Monday morning. That's today. Again, the 9th of September. It right off the box kicks out the short. Here's your initial risk stop. And then all of a sudden you start to see 3 ATRs later, the ATR kicks in. This is the dynamic stops are gray. This is the both the ATR as well as the dynamic with the LCC as well as compression were both at about the same level. And so one kicks in, and what took over? The compression stop exit, banked the profit out of both trades. Wonderful day, phenomenal trade, and it made really amazing sense combined with the volume, number one. And we talked about this in the live trading room. I said, hey, guys, great trade. I don't want to see all that profit. I mean, if this is where we are, I don't want to see all that profit give up. But to be honest with you, we got the compression taken over. I see that the volume here is drying up on the downside, so we would want the compression or something to kick in and lock in the profit, and it did. You could be done for the day right now. And by the way, that was approximately, if you think about it, this system went short at around 89 and change, 89 and a quarter, and if you'll notice here, out at around 85. So it's about $400, almost a $500 profit. Do that twice a week and on 2 contracts. 2, that's it. All right, so all right, let's move on. What I really want to address is the rest of the board here. The rest of the board took a short gold, covered one, and look, 0. It got out. So it took that short in gold. It took the short in the British pound. You can see here, got out of half the position and got out of the other half. So that's off the boards. So what's left with us right now? Currently, what's left is we went long. It reversed on gold. So we'll see what happens there. Currently, the board is long gold right now. Also, we went with a 15-minute model. It broke out and is not making money right now. Look, we went long at 86, 84. We're losing $200 on the 15-minute model. Why do I have a 15-minute model and a 5-minute model? Well, here's why. We have 2 sets of clients. Some who can't trade every second of the day, some that want to trade every once in a while, and so we have 2 models. So that's why we have the 5 and the 15. So the neat thing is if the 15-minute has a decline in volume and you got that 5-minute sell signal, hey, that's wonderful stuff. It helps confirm. That's number one. And number two, like I just said, we have 2 different models because if one is short and one is long, you can't be in both. You have to trade one or the other. You can't do both, but they're good as a confirming tool. Finally, what's in the middle chart? And I also share this with you a lot. This is the advanced decline analysis. As the stock market's moving up, the breadth of the market is kind of weakening. And this cash market, what do the futures trade off of? They trade off the cash market. What does the cash market trade off? The amount of stocks that go up and down every day. So basically, this is a program that makes sense, that you could see if we have a weakening structure in the cash, which is the spiders, weakening structure of the breadth, it means more stocks are selling off. Then I don't want to be long, and I want to make sure I got some really tight stops there, because even though this is an extremely profitable system, guess what, gang? I don't want to lose money on a stupid trade. So if it doesn't make sense, I'm an LML RFN, and I can override the trade. More importantly, let's move over here to a couple other markets. This, again, same concept. This is a 120-minute. This is a 60-minute. They both are in sync. This is the VXX, or the Volatility Index, exchange-traded note. When volatility goes down, theory is stocks go up. But here's the other aspect that no one really wants to teach you, or they don't know the difference. This trades off the first 2 front contract months of the futures. The futures trade off the VIX. The VIX trades off of the valuation of demand for bid and ask, even of 5 strikes of calls, 5 strikes of puts on the SPX, or SPY, excuse me. So here's what the story is. If the volatility goes down, stocks don't always have to go up. They just don't have to go down. So volatility can go down because stocks aren't selling off. So that's the difference between the VIX and trading spiders. Again, if the stock market doesn't go down, it doesn't go up, it doesn't go down, the VIX can go down. So that's why we have a VIX program, both 60-minute and 120, to capture higher degree trends as well as the market. Now, the VIX is short. I've been showing you that in the SPXL. If you go back in our videos over a week ago, you notice that that's the same long position. It took some heat, and now it's making money. Our spider is making money. Our VIX is making money. So what am I looking at? Well, should I stay with my long positions, or should I take a profit and be quick to take a profit? Well, I'll tell you what. Here's the answer. If I see, here's the profit target down here on the VXX 60-minute model, and that's what I got my eye on. That's around 23.74. That's 50 cents from here. So what's 50 cents? You think about maybe a 2% move, a 3% move, 4% move further down from here, and that's getting really rich, okay? And if that gets down there, my profit target in the spider, I'm not sure what I'm going to do, but I can tell you this. The volume trend on my volume indicator on the SPY, price is going up, right? What's this indicator doing? It's red, it's going down. So to me, I've got a very tight stop right now enacted on my SPY. Now this is the last conditional change on the SPXL. So let's take a look at SPXL. So it shows on the board where it was long from, and not to make any bones about it. Here's the new long position right there, and there's a share price, and there's your emergency stop. So if this thing kind of goes down and stops us out, we're going to bank a profit. That's it. It's over, done with. It could go up, it could go down, who knows? That's part of trading. But right now, the longer-term volume action is improving in the near term. So that's kind of like, wait a minute, person, you're confusing me. You got one indicator that's showing lack of volume. You got another indicator that's showing great volume. Well, all I know is that there is a difference between SPXL, which is a 3-time leveraged ETF, and all I know is volume can change, but right now it looks very positive, right? The daily charts are very positive, but baby, we close underneath 51.74. You don't want to be in it. That's the moral of the story. So that's a couple things, and I'm watching out to see if the 60-minute model, what comes first, the chicken or the egg? Well, I'll tell you what comes first. The 60-minute sell signal will come before the end of day sell signal usually, right? So moral of the story, if this 60-minute sells off and we don't see any volume come into the game, I'm out of my long positions. And I more than likely will trust the system will get out. If not, I'll override on my current positions. That's how I'm using the Algo optimizer in the live trading room. All right, let's move on to other things. So in the live trading room, a couple things that we did. We had up here, if you notice in the live trading room, we have 2 rooms going on, and I've often shared this with you guys. If you're not in joining our room, I don't know why. It's not expensive, and it's just saves you, it's fantastic information. One of our things is that we said on 9/3, I gave out an outlook for Twitter that should trade to 46, and we were talking about bull call spreads. This is a casino, Red Rock Casino. I'm fairly bullish on Red Rock Casino, and it's been in other videos, and it's doing well. Adobe, we went short Friday at 89.22, and all we've done is dropped our stop down here to protect the profit on Adobe. GE, we're long GE with a put option behind it. TBT, we're long the 24 strike calls. This is Oxy, we're long Oxy, and XOP's up, but Oxy isn't, so it's giving me a headache. This is Wayfair. Today we said if Wayfair generates a close greater than these green lines, it's going up, and there is our breakout. This was done this morning in our morning briefing. Why Wayfair? They provide stuff that goes in your home. Right? Furniture coverings, stuff like that. I don't want to get into the long and the short of it, but I think that if we see housing going up, then in like the builders. If they're building homes and they're selling homes, guess what? Crap's got to go in the home. And kids that are buying homes, new homes specifically, that age group, if you think about this for a second, and you may be one of them and you're laughing your ass off probably at this old man talking, and you're saying, I'm going to tell you, between the 28 and 38 year range, you got the kids are getting married, they're buying a new home, and maybe they upgrade it into a better, bigger home. And the wife is like, hey, it's baby time. Tick tock, tick tock. 40 years old, I want kids. And the guy's thinking, yeah, I could do kids too, but I don't want to be a soccer dad at 50 and having to, because, it starts getting a little tiring, right? So the moral of the story is you buy a new home, you sit down in your family, and you have a big home, and now you have a new home. What goes in homes? Crap. Furnishings, window dressings, furniture. Oh, furniture. And where would people buy furniture? Well, I think where people would buy furniture is real simple. I think what's going to happen is, the kids that are in that age group are more prone to use stuff online, mobile apps, Wayfair, boom, there it is. So that was my analogy on Wayfair, by the way, this morning's session. Twitter. We talked about Twitter near 46. Listen, it's so damn close to 46. That's why we made a post in Twitter. Last week, I gave my targets on Twitter to 46. It's there now, more or less. Do something about it. So that's why I replaced the chalks and the stars. So this was the comment, right, that I put out. And that's where we had on 9.3. If I go up to the comments above are always saved. So we're big on looking at advanced decline information, and here it is. GE is option protection. We don't really care. I'm looking for upside in Twitter to 46 levels, so we replaced the charts in the stock room. There's 9.3. So here we are near 46. Well, what do? Take the profit. All right. I think the market may be short-term overbought here. We get a little pullback this week. I know this is too long of a video. My bad on that. But there's a lot of stuff here. And I think that we've got our finger on the pulse, and I know I can help you because we've got the right indicators. We've got modernized indicators, and we're not looking at our emotions getting in the way of the market. And that's the tape reading skills that I try to teach people. And that's why we've developed a lot of different, at least not just indicators, but how we put indicators together in a logical, interwoven fashion. And that's what we have here put together on stock trades that we have with using relative strength, persons pivots, buy signals, etc., on TradeStation's radar. That's how we're able to dance around. And with that said, one of our biggest short trades right now we got on, how many people are bullish the stock market and are able to go short Adobe? How would anyone come up with that? Well, I'll tell you why. Because we identified that at the end of August, we had a monthly low close doji on relative strength divergence. The volume indicator, this is the proprietary volume indicator I keep bragging about, is worth its weight in gold. Market makes a newer high. The number 2 point is higher than the number 1 point. The number 2 point is lower than the number 1 point. Volume divergence, monthly low close doji. We look for a small spike up in the market, got filled Friday, and now we're enjoying a little bit of a ride. I don't know if it's going to get down to that white line in the sand first, or we've got a trailing stop function in. But I can tell you, what I like about that trade is real simple. Sell some of the higher price stuff and get out of maybe real estate, get out of maybe the defensive stuff like bonds, and get into regular stocks. So I think they're seeing a transition in the market, number one. Confidence coming back into the game, number two. But we got fund managers have to address all these positions they've been in, like what? Gold miners, staples, real estate investment trust, all the safety stuff. So you got to liquidate the safety stuff, then look to see the pullback, and then if by Tuesday's close or Wednesday's close we get a pullback with a pop to the upside, this market's going to rock and roll. 310's my call in the spiders by the end of September. I'll update you later. Thanks again.